Hello, my name is Tim Klusas, and today we have assembled three industry experts to discuss the future of underwriting. Once again, I'm Tim Klusas from the Market Alliance, or TMA, and today we have Brian O'Connell, Jeremy Singer, and Marty Johnson. Brian is the Vice President and Chief Underwriter and the Head of New Business at SBLI. Jeremy is the Assistant Vice President and Chief Underwriter at the Cincinnati Life Company, and Marty is the Vice President of Individual Underwriting at Mutual of Omaha. So let's engage in our discussion, shall we? So first of all, Marty, I'd like to start with you to build the bridge from where we are today to where we're going in the future. So obviously the big story that's affected everyone this year is COVID-19. So my question for you is, are there any big surprises that have emerged as a result of your response to COVID-19? And what are some of the things that will raise the bar going forward? And then further, how the industry would assess a COVID-19 diagnosis for prospective insureds going forward.
Well, there's a lot there, Tim. Yeah, thank you. Obviously it's been an interesting year from a COVID-19 perspective and how that's all been addressed, not only from Omaha perspective, but from the industry as a whole. It's made for a lot of changes. You've seen a lot of increases in non-admin limits. You've seen alternatives to parameds and blood and urine that we've had to identify and obtain. Same thing for APSs. EHRs obviously have become a bigger part of the picture during this pandemic. Going forward, I think the long-term effects of COVID is going to have an impact on us for quite some time. The long haulers that we're seeing that have recovered, quote unquote, from the infection, especially those that have been on ventilators, we're seeing some long-term effects there. From Alzheimer's type cognitive deficits, et cetera, depression, psychological issues, just from having to go through the ordeal that they went through. So I think that's something that we in the underwriting environment are going to have to deal with, not only in the short term, but certainly as we continue on through certainly 2021 and until we have a vaccine with a efficacy rate that's getting this thing under control.
Thanks, Marty. Jeremy, what do you think some things that we've learned as this has happened to us, things that will raise the bar going forward?
Well, we were kind of thrown into a situation where we weren't really prepared, and that was COVID-19 shutting down one of our vendors. And when that happened, it's like, all right, well, what do we do? We got this business to process. So we went and said, hey, we've got a lot of field reps out around the country. They're all licensed agents and they're not seeing much windshield time right now. So let's get them on the call. Let's get them on the phone, making the calls and completing those applications. And it's something that a lot of my friends out there listening to this right now are saying, yeah, Jeremy, we told you so. Do it yourself. You can do it better. Well, you know what? We are doing it ourselves and we are doing it better. And that's something that, we're going to continue to build out. And so COVID-19 really pushed us into doing that ourselves, and we're seeing benefits from it. Better communication between those folks doing those phone calls to complete the applications and the underwriters, being able to do some triage much quicker than we could have before, and honestly getting the application completion at a much higher rate than what we were seeing in the vendor solution. So that was something that was kind of different that maybe not everybody, all the other carriers are seeing, but a little bit different than, waving fluids and trying to find different methods. The COVID-19 situation was the impetus just to kind of start that.
So it sounds like it pushed you in an experiment, but with very good and positive results. That's
exactly.
Yeah.
Exactly.
Brian, anything you'd like to add to that?
Yeah, and I think from a couple things, as an industry, we were pretty in good position. Where I think a lot of us had been remote for years. So we were ready to jump into that. And then as Jeremy said, we had to think quick. We had to think quick when, examiners weren't going to go out. Did we have other areas, other replacing information that we could use that we could still offer the same, products? Again, I also experienced that vendor shutting down. So we had to say, okay, by that Monday, that happened on a Friday, by that Monday, we had to be up and running. And distribution wanted to know what we were doing. So just having those relations with the vendors were great. Otherwise, saying, what can we do? That was big. And I think as an industry, we were in pretty good position, especially too with the whole digital platform that a lot of us already had. Had we not had that and relied on examiners going out, we would have been in a difficult position.
Agree. Okay, thank you. Thanks, everyone. Brian, next question is for you to think more about the future. How does your underwriting process look different in 3 years than it does today?
I think you're going to see more engines being run, basically underwriting engines. We're there now, but now it's going to be increasing the amount of decisions it can do. So a lot of single session decisions where you get an immediate decision. Again, it's there, but how much? I think we're going to see more data. We're utilizing more data to keep the rates down. And again, I still think, and I'll say this, that I still think that you're going to need underwriters. You hear, are we going to need underwriters in 3 to 5 years when electronic health records come into play, and if they ever do. My favorite line is an engine in all these single session solutions are rules. And I think underwriters can live by a guide a lot of times. So I do think that they'll be there. But like I said, I think there'll be a lot more digital solutions, single session solutions out there for clients to obtain insurance.
Great. Marty, what do you think? How does your process look different in 3 years than it does today?
Yeah, I agree with Mark. We're going to see more and more automation, more products added to those automated platforms. You'll see, I think you'll see face amounts continue to increase on what they'll handle. Anything that's less intrusive to the consumer is where I think we're all headed. Whether we can replace blood and urine completely, I don't know, but I think we'll definitely be pushing those limits further and further away as we can get better data, better analytics, and the fact that it's accepted more. That's a key, I think, to driving this, is getting acceptance both in the BGA community of accepting these analytics and the algorithms that go with that, much like we had to go through, not to update myself, but back when blood and urine came on board and we started using that and had to go through that whole acceptance pattern for that. And I think we'll go down that same road. It will continue to grow and just get bigger and bigger.
Great. No, a lot of good stuff there, Marty. I appreciate you mentioning how it affects some of the distribution, and also how we're going to replace some of the more intrusive things for the consumer. I'm going to come back to that. I appreciate that. Jeremy, anything you'd like to add to that, how your process is different in 3 years?
Yeah, I mean, echo what was said by both Brian and Marty. I see that automation. I want to clarify some of the automation as a careful implementation of automation, because I think we need to be careful that we just don't throw everything into this machine and hope that it spits out the right answer. And, if you take the underwriter away, you take away a lot of that explanation to the producer, to the BGA, to the case manager as to why the decision was made. And, machines are great and they can do some of the mundane tasks, but ultimately, we're a people industry, and it's the people that really are able to sell that coverage. And, computers can't always do it as well as we can do it. I like to think of that automation as being able to take all this data and really find the right, I call it right sizing requirements, getting the specific requirements needed to underwrite that risk, and don't get anything extra, don't get anything in excess. It's going to help expenses and also just help that streamlined process of taking that application and making a decision, getting it placed.
Great. Well, I appreciate that. Once again, talking about the people that generate some of the business to send to you. Let's talk about distribution for a second. I'm sure we have a lot of BGAs, case managers, and maybe even producers watching as well. Let's talk about their role in the future of underwriting. And most particularly, how do you expect their roles to change? And I'm thinking about the relative importance, of an agent or a BGA, and even as BGAs try to differentiate themselves from each other. How could they do that in the future of underwriting? Yeah, Brian, you want to start?
Yeah, I'll start, Tim. So I think it's already changed. I think it's up to a lot of agencies to say, okay, what are the processes, the different processes around the industry, right? Maybe it isn't just pricing right now. And the other thing is, when we launched Accelerated Underwriting 4.5 years ago, I still think there was that misunderstanding just in the industry of what it is. What is accelerated underwriting? It's really, basically, I say it's replacing requirements with other requirements. It's still fully underwritten business. So we did experience a lot of shopping and a lot of just immediate declines because I think people said, oh, they don't need a blood, right? Blood and urine, so I'm just going to send it here. So that whole upfront pre-screening and understanding what kind of fits the model of your carrier, it's probably more, it's more important now, I think, than ever. So we really need to have that upfront pre-screening. And I know it's tough to say, okay, well, I don't have access to the credit history. And that's why it's on our end to give you as much information on the back end if something is adverse on that. We have to give you some detail to know on the back end if something has to be sold or you have to tell somebody a decline or something like that. But like I said, it's more important today, I think, than it has been in years.
Interesting. Marty, what would you say about that? You mentioned the BGAs before. How does one differentiate themselves?
Well, I think it's still a value add situation. I mean, it's life insurance is still sold and not bought, in my opinion, for the most part, and so they still have a key role to play in that regard. I think the office, the case manager, and the back office, their role is definitely as well. They're masters and have been at able to assess risks and of applicants that come in, direct them to the carriers that they think will best fit. These point of sale and automated solutions are going to change that, obviously, significantly. A lot of that business, especially what I'll call flow business, won't necessarily get to that. Now we go right through and we'll get it. E-policy delivery, et cetera. So the role is going to change in what they're doing today, but they still are going to have significant impact going forward. And basically determining, I think, the difference between automation and accelerated. Okay, there's automated and there's accelerated, and they're not necessarily the same. And so we've got to be able to do that pre-qualification that Brian mentioned up front so that they're still driving that business where it needs to go.
Okay. Jeremy, what would you say to answer that question? How does a BJ differentiate themselves?
Yeah, well, I like the adage, what Marty referred to as life insurance is sold, not bought. Is there a direct to consumer need out there? Yeah, absolutely. It's going to be there. But where the BGA can really come into play is those situations that just don't fit that market. That's great for someone that maybe just has a kid and, they want to get some coverage in place. They just got married, and that might be okay, that direct to consumer model where they just need a simple product that provides us for some coverage for a short period of time. But for really true planning and matching the person up with the carrier that provides the right products and possibly, matches up with their potential significant medical history, the need for a BGA is always going to be there. The need for an agent is always going to be there. And I really don't see that changing. We can try to make underwriting more streamlined and more efficient, but ultimately you're going to have those cases that are $20 million, and you're going to need somebody that knows what they're doing financially, medically, to be able to put that case together and send it to the company and say, here you go. This is a great risk. Here's why they need the 20 million. You're not going to get that online. So, and I think that's really where the continued need is. And also it's like, I look for experts when I'm trying to do stuff. I don't go online and, try to rewire my house. I'm going to hire an electrician to do it, or at least get some really good advice. And I think, life insurance is kind of the same way. You really want somebody to provide you with some of that good knowledge to be able to get the right product.
Mm-hmm. No, I agree. So it's interesting, Marty, you made a point earlier how as underwriting continues to evolve and with the future of underwriting, you could see us as an industry actually doing less. In other words, less things that the consumer may find intrusive in terms of testing and things like that. And I know, Jeremy, in a prior conversation, you mentioned that some industries are actually doing more, like, for instance, in property casualty insurance, doing more things to improve the explanatory power of underwriting or do a finer job with the underwriting. I find it interesting that we're going in different directions. And I find it interesting from the standpoint of, you mentioned the BGA earlier, someone who wants to reach more consumers, and it's a question we all wrestle with and a dilemma. How do we get more people insured? So talk about that for a second, how some industries, that underwrite are adding more things, and the life insurance industry seems to be trying to replace things that consumers find intrusive. Talk about that for a second, if you don't mind. I guess I'm addressing a question to Jeremy.
Yeah, so, and that's a very good point. Back when they started using credit models on the P&C side, it was a supplement, what they already had. And we're looking to try to make things easier because honestly, it's a horrible process. Who wants to go through, visit with an examiner, traditional underwriting, wait 2 months for medical records to show up? So we're trying to make it better. And in doing so, we have to be very cautious because we're bringing in, the credit models, we're bringing in, different data sets, but we're also getting rid of some things that we've become very comfortable with using to price a product, to understand the mortality implications. And when we start removing those tried and true underwriting requirements, we have learning. We have to learn how these new products, underwriting data points, how they affect the ultimate mortality of that whole group. And you know what? Ultimately, last 10, 20 years, mortality has been improving. People have been living longer. And that's a question right now we have to kind of look at and say, okay, is that going to continue? There appears to be some slowing up of that. Also with COVID-19, how is that going to affect our entire group as we move out, our entire group of insurers, as we move out and look at that long-term mortality? So it's a fun time to be in the industry and in underwriting, and to work with the actuaries and even the data scientists to try to figure out what this looks like going forward. And it's going to take years for, I think, everybody in the industry to feel very comfortable where we are going with this new underwriting as opposed to where we have been with our traditional underwriting. Interesting.
Marty, you mentioned it too, how your process would evolve, the fact that we're replacing things consumers may find intrusive. Just talk about that for a second and how that affects the underwriting process.
Well, I think it's recognition mostly of our demographics today. I mean, we've got millennials and Gen Xers, et cetera, that they're used to graphics. They're not going to wait for a 60-day process to get through underwriting to get them, the insurance that can sold to them with their purchase. And so we're going to use these tools, as Joe mentioned, in lieu of some of our standard tried and true stuff that we are very comfortable with, that we have the data behind it. We know what kind of protective value that they provide. And we're switching over to new tools that we think are going to provide the same amount of protective value to the company, yet be able to deliver a more consumer-friendly, I guess, process to those who are looking for that and will then continue to buy from us. Because we're just not going to set still, I don't think, for how we've done it for decades.
Okay. Brian, I have a question for you. I think you'd like to add to that first.
No, I mean, it's basically the same thing. A lot of what we're doing today with process is built around what's going on, just outside of the industry. I mean, everybody's on their phone or computer. My kids don't watch TV anymore. They watch on the computer. So you're kind of really building up your process to what, the social life is today. So, but it's the same thing, with AU, especially the AU requirements we're using. Like I said, the first thing we thought of was, okay, we're no longer getting blood and urine and build and nicotine. We're losing all that. But are we gaining other things? We're using some of this data now. The data we used to use, the information, we never knew people were in bankruptcy. Now we do find that out. So maybe in a different way, we're protecting different kind of risks. So it'll be anxious to see how this goes in 10 plus years.
Okay, thank you. Brian, let's talk about electronic health records.
Yep.
The promise of what that was supposed to do for us. But I think, let's talk about the promise of it versus the reality and how electronic health records have to evolve to be more useful in the future.
So we, luckily, we had a head start. We were going to do a pilot this year. We had a couple of vendors, and there's obviously different solutions. we were ready to pilot it and basically try to order the electronic health record and compare it to the traditional APS. What happened was obviously COVID hit, and we were under the assumption that all these facilities are going to shut down. So it was like, okay, if you can use them, if you can get them, you can use them, use them. And so we really weren't able to use a pilot, but we did end up trying these couple different solutions. And obviously there's patient portal solutions, there's electronic health records, there's electronic medical records. We're a little bit of ways. It's a good start to a solution, and you talk about 3 to 5 years. It'd be great to have that solution to get rid of the traditional APS. It is not a traditional APS. None of them are, but you got to find the right way as to what benefits your process. I think the patient portal process is good to verify a person who doesn't necessarily have a lot of history, because you're not getting a lot of details with these. You're not getting the details of a traditional APS. Sometimes you don't need that. Sometimes you just want to verify info. Some of the other solutions, which are health records, it's kind of a shot in the dark. Are you going to get some information? Or are you only going to get like 2 pages? That's where we're not really ready yet. But like I said, this whole COVID season this year kind of forced us to really take a quick look at it as to where we are. And so we do have some time, but like I said, it's not the solution right now for everything, but it's there. It's something to really look at now, and I think we'll get there eventually.
Interesting. Jeremy, what would you like to add to that? And anything?
Yeah, I really don't have much to add. We've kind of held off on doing any sort of official pilot or anything with EHR until it just becomes more mature. You got to prioritize things, right? You can't do everything at once. The latest I heard in talking with vendors out there, 20% rate of actually getting records back. And like Brian mentioned, how good are those records? It depends. And so I think it's definitely where the future is going to be. It's just going to take some time to get there.
Mm-hmm. Marty, you agree?
I agree. Yeah, we are just finishing up actually. I mentioned the 3 to 5 years. I think we've been hearing the 3 to 5 years, for probably 3 to 5 years, and I think we've that far out at this point. It's not mature. We've made progress. We've now got the records digitalized, but that being said, they are sort of all over the place. There's no common format. As I mentioned, you get a variety of things when you go, instead of trying to figure out what you're getting and comparing that to a traditional APS. I just said we found it. They're not a traditional APS. And so we've got to find where they fit, and there is a fit for them. I'm just going to figure out where that's at. Okay,
thank you. Okay, great. So I'm gonna pivot the conversation for a second. So obviously in the industry we've seen some venture money come in, and it's really done a lot of things for innovation. So now I'm just going to play pretend here for a second and say you have venture money to invest as the underwriter. So my question for you would be, if you were going to make an investment, where would you make it? With the outcome of wanting to move things forward in underwriting, would it be the quality and volume of data? Would it be speed? Would it be convenience? Would it be aggregation of data, or would it be some proprietary algorithm? And I'm going to pose the question to you, Brian, first. Where would you go with that money? Where do you think the biggest promise would be with it?
I wouldn't put it to speed, because I think no matter what kind of data you use, the speed's going to be built in. I would put it more to the quality of data, more into like a medical piece of data. I think we have some of the other factors covered, but we're still kind of missing some of that, I think, medical piece. Obviously, the RX check is a great piece. The lab picture's been pretty good. The hit rates are increasing, but I still think we're kind of missing that one medical piece of data that I would love to have. And then you put it all together. I do like that ultimate kind of single session scoring that you can kind of get a better risk factor. You might have a lower credit history, but a fantastic medical piece where you can put it all together and price that way. That's what I would like to invest in.
Great. Marty, how about you? Where would you invest?
Yeah, I agree with Brian. I would go, speed is going to be there. A lot of data out there, obviously, but I want aggregation. I want it aggregated together. We've got a plethora of risk scores out there. Everybody has a risk score that they'll provide for you. We've got EHRs, we've got all kinds of data, but I need to put it together and give me a single point of information that I can make a decision from at this point without having to go to multiple vendors, et cetera, and determine which one I want to use. So aggregation is what I do.
Great. Jeremy, you agree? Is it the aggregation of everything in one single point?
Yeah, I agree, but I'll go ahead and just for the sake of being a little different, let's go just beyond where we are today. And I'm going to go there. I'm going to say I'm going to invest my venture capital money into some epigenetics company.
Great.
Let's see, and you guys can look it up on the internet what epigenetics is. But invest in that company and hope that there's some sort of wonderful test that can come out of an easy saliva sample or something like that they can just submit into a lab, and the lab can say, hey, they're going to live to be 95 years old.
Wow, interesting. All right, Jeremy, since you opened that whole line of conversation, give us the 30-second elevator pitch on why epigenetics.
I'm gonna read here. I did my own Google search. So epigenetics is a study of how your behaviors and environment can cause changes that affect the way your genes work. Unlike genetic changes, epigenetic changes are reversible and do not change your DNA sequence. So basically, it's those external factors working on your body and making those minor changes, but not to the actual DNA. And it's really fascinating if you're a geek and want to really go and learn a lot about this. You can go and find all sorts of stuff about it out there online, but it really has the potential to really help people, not only from a life insurance standpoint, but from a health standpoint. And tell the individual, hey, we see this going on inside your body. You really need to mitigate this one risk factor that you're doing. And it's not genetics. It's so you get the whole state question: are you allowed to do any sort of underwriting based on genetic testing? It's different than that. So it has the potential to be create some really interesting things for us as we move forward.
Well, thanks, Jay. It would be a good panel unless we stirred the pot a little bit. So thanks a lot for bringing that up here at the end. So, hey, a couple last questions. I want to make sure we hear from everybody on this. So I'm going to go around pretty quickly here. What new skills do underwriters need to acquire or develop to be most effective in the next few years? So, Marty, I'll start with you. What do you think underwriters need to be effective in the next few years? What new skills in particular?
They're gonna have to know how to manipulate the data. I mean, we're going to continue to see more and more data, and they're going to have to figure out how to manipulate that and then apply that, to a risk assessment going forward.
Okay, Brian, necessary skills for the underwriter going forward.
Two things. One, I have underwriters that have been doing it for 30, 40 years, and now try to tell them that we're no longer getting a lab, right? And so, open to change is the big thing. Understanding why we're doing this and why we're into this data and using data and all that to protect mortality. And the other thing is common sense is a big thing. You got to be able to put all this, no case is different. When you're getting some of this credit history, one might look bad, the other might look bad, but one's a much better risk. And so to really understand all that, no two cases are the same when it comes to some of this data. So that's really a big thing. Don't base it on a rule. Don't be a robot, right? Sometimes you got to take a look at the case and just have common sense. It's a big piece of it.
Jeremy, how do you train underwriters for the future?
And being able to take those things that were just mentioned and be able to sell it and sell that decision and explain it. And because ultimately, if you can't explain the decision that came out of whatever type of underwriting system you're using, you're not going to sell it.
Great. Okay, final question. Jeremy, I'll start with you. Give me your boldest underwriting prediction for the next 5 years, if you haven't already.
Submit name, address, social security number, date of birth, and we'll give you a decision.
That is bold. That is very bold. Marty, what do you got?
along those same lines, I'm gonna say we're going to have the Carvana of insurance. You just you pick it out, you buy it online, and it gets delivered to your door.
That's great. Brian, so if they get those cases, Brian, what's your bold prediction?
Traditional APSs are gone. Long
Really?
gone.
Wow. Very
That's
bold.
bold
Very
prediction. I
bold.
didn't say it was going to happen.
That is very bold. And we're going to end on that note. How about that? Well, so I just want to thank each of you, Brian O'Connell from SBLI, Marty Johnson from Mutual of Omaha, and Jeremy Singer from the Cincinnati Life Insurance Company. And once again, I'm Tim Klusas from the Market Alliance. So we'll now continue with the NAILBA 39 Engage schedule and stay engaged. On to the next session.